If you look at the economy right now, it's easy to feel like we're stuck. You feel the squeeze at the grocery store, and you definitely feel it at the pump. And when you look to Washington for a solution, this is what you usually find: an empty room. There is a widespread public perception that the federal government is paralyzed, unable to pass systemic solutions to fix the economy. But this sense of gridlock is a distraction. While everyone is focused on congressional inaction, a massive private economic restructuring is operating behind the curtain. Take the recent collapse of the Clarity Act. This was a bipartisan bill designed to provide a regulatory framework for digital assets in the U.S. But with the timeline getting short, negotiations stalled out in the Senate. The delay follows a familiar pattern. Figures at the top of traditional finance criticize digital assets to the public, while their lobbying arms write the checks that fuel political opposition to the bill. Politicians then use specific scandals to justify killing the legislation. When prominent figures launch controversial meme coins, Senate opponents immediately use that volatility to shut down the entire regulatory conversation. The resulting stalemate leaves the digital asset market in a state of federal limbo. While the public watches the debate, the laws governing these assets remain unwritten. This stalemate creates a strategic window. By keeping crypto-native companies in regulatory uncertainty, traditional banks gain the time they need to build their own digital infrastructure. BNY Mellon, America's oldest bank, is a prime example. They just partnered with Galaxy Digital to bring institutional staking to their platform, allowing wealthy clients to earn rewards directly on blockchain protocols. At the same time, BlackRock, the world's largest asset manager, is expanding tokenized money market funds on Ethereum. They are converting traditional treasury funds into digital representations that settle on-chain. Institutional capital is migrating, leaving slow legacy financial pipes and flowing into newly built blockchain networks. These banks are bypassing the need for new legislation entirely, routing digital asset pipelines around the stalled Clarity Act. Wall Street has adopted the technology they publicly lobby against. The political theater in Washington has now become a sideshow to the actual transition happening on the ground. This infrastructure build-out is moving beyond institutional trading desks and directly into the global consumer market. Western Union is launching a dollar-backed stablecoin Visa card, letting everyday users hold and spend digital dollars at millions of traditional retail locations. The hardware is already in place to support this. Samsung is integrating stablecoin support natively into 800 million smartphones, turning the device in your pocket into a digital asset wallet. While politicians argue on television, tech and payment giants are hardwiring digital dollar rails directly into the global economy. The decision to bypass federal gridlock is now showing up in state-level fiscal policy. Missouri is currently throwing out the traditional tax playbook. They are moving to ignore federal economic policy by unilaterally rewriting their own tax laws. They are following a strategy from economist Art Laffer to phase out the state income tax entirely. The mechanism is simple: eliminate the income tax and broaden the sales tax base to maintain revenue. This is designed to instantly incentivize growth and attract wealth from other states. States are engineering their own economic booms. They are proving that structural progress no longer requires permission from Washington. During a transition this significant, it is easy to be distracted by the noise on your timeline. You will see contradictory public statements from industry figureheads like Michael Saylor. His recent decision to sell Bitcoin after years of pledging otherwise is a reminder that individual actors are unreliable indicators of the market. You will also see lingering corruption, like the FBI agent recently caught stealing crypto from the agency's own evidence wallets. These individual scandals and personal hypocrisies are surface noise. They distract from the quiet institutional takeover happening underneath. When you step back, the reality becomes clear. The shift to a digital financial and decentralized fiscal infrastructure is already structurally locked in. If you are waiting for a moment of bipartisan political consensus, you are going to miss the actual realignment. The players are in position, and the foundational rules of the economy have changed. Your financial survival depends entirely on whether you are watching the right game board.